Across Europe, an entire generation is currently romanticizing the soft life, masking their economic despair with quiet luxury and doom spending. Imagine the global economy as a high-speed, closed-loop train, where the youth are burning out just to maintain the illusion of a perfect seat. A brutal truth divides the passengers on this train into two distinct halves. One half is drowning under the crushing weight of their borrowed tickets, while the remaining half uses that exact same weight to buy the train itself. If you stay until the end of this journey, you will master the hidden law behind this game, unlocking the ultimate key to true financial sovereignty. Forget every empty platitude you have ever been taught about personal finance. Today, we are decoding the singular metric that dictates your financial destiny. At its core, borrowing money is not a terrifying trap, but merely the act of renting capital from someone else. You take a specific amount, you pay a rental fee to hold it for a defined period, and eventually you return it. The only question that truly dictates your survival is whether the rented money generates more than the cost of the rent itself. If you rent funds at a cost of 4% and deploy them to capture 7%, you simply pocket the 3% difference from money you never owned. That mathematical void is called the spread, and it is the absolute secret to this entire operation. The true magic materializes only when you fuse this spread with the raw power of leverage. Your return on your own capital equals the spread multiplied by the total amount of rented money you control. The more borrowed capital you successfully stack on top of your own, the more monumental your financial empire becomes. The wealthy never look at a new loan and desperately calculate how quickly they can pay it off. They stare at the principal and coldly calculate the spread, measuring exactly how many assets they can control with it. Same capital, same interest rate, but their psychological framework exists in an entirely different universe. Consider the oldest and most ruthless tactic in commerce, known as trade credit. The elite operators almost never use their own liquidity to purchase their inventory upfront. They negotiate terms to receive the product immediately, delaying their payment for 30, 60, or even 90 days. Through this mechanism, the supplier morphs into a bank, and the physical product itself becomes the loan. You liquidate the inventory long before the invoice is ever due, collecting cash from the consumer and returning the base cost to the manufacturer. You capture the entire profit margin without risking a single penny of your own wealth. When your invested capital is mathematically zero, your actual return on investment becomes infinite. The next theater of operation is real estate, where the mathematics become truly devastating if you calculate them with absolute precision. You purchase a distressed property for $500,000, putting down 20% and financing the rest. You inject an additional $50,000 to force the appreciation, pushing the market value to $700,000. At this exact moment, you return to the bank to refinance, extracting a new loan against the elevated value, and pulling your original cash out. You retrieve every dollar of your initial capital, yet you permanently retain a cash-flowing asset. Now we elevate to the realm of the ultra-wealthy, utilizing a strategy built on acquiring, borrowing, and eventually passing away. This is not a hidden legal loophole, but a masterful synchronization of three basic financial laws. They acquire assets that aggressively appreciate in value, and they absolutely never sell them because selling triggers a massive tax event. Instead of liquidating their portfolio to fund their lifestyle, they pledge those assets to a bank as collateral, extracting tax-free cash at incredibly low rates. They willingly pay a 6% rental fee to legally evade an income tax that could reach 24%. By the year 2026, the estate tax exemption limits are projected to still offer monumental advantages. When these titans finally pass away, their empires are transferred to their heirs with a completely reset market value. The colossal tax burden that should have been collected over a lifetime is legally and permanently erased. You buy, you never sell, you borrow to live tax-free, and you pass away to wipe the balance sheet clean. It is a flawless, perpetual wealth generation machine. However, absolute power always carries devastating risks, and financial leverage is certainly no exception to this rule. When you borrow heavily against your existing assets, the lending institution will monitor your portfolio with a ruthless gaze. If the global market collapses and your collateral loses value, They will demand immediate capital or forcefully liquidate your assets. Leverage can multiply a minor spread into a generational fortune, but it can equally multiply a mistake into an unrecoverable disaster. This is especially true with short selling, where your potential losses have no mathematical ceiling, capable of liquidating everything you own. Let us descend back to a reality where you can execute this exact principle today, through credit card balance transfers. Financial institutions frequently offer promotional balance transfers with an interest rate of 0%, lasting for 18 to 24 months. You only need to pay a minimal upfront fee of around 3% to initiate the transfer. If you are currently suffering under a debt with a 24% interest rate, executing this transfer is a remarkably sharp maneuver. You are essentially paying 3% to instantly obliterate an entirely predatory interest rate. The final secret to dominating this game lies entirely in controlling the actual cost of your rented money. While the masses are obsessively focused on earning more income, the wealthy focus on making their borrowed capital as cheap as possible. Your personal credit score is the single greatest lever that dictates this exact cost. By elevating your score from average to excellent, you effortlessly save tens of thousands of dollars in interest over your lifetime. The wealthy do not possess a secret bank. They have simply transformed themselves into the most reliable borrowers on the planet. The entire blueprint has now been revealed, and the ultimate choice rests entirely in your hands. Debt is nothing more than rented capital, and the only rule that matters is making it earn more than it costs. Once you invert this equation, your debt stops being the master that owns you and becomes the weapon that you wield. The lower classes will blindly exhaust themselves trying to pay off their balances as fast as humanly possible. The architects of this game will calmly ask what the spread is and calculate exactly how much power they can control.